Political wrangling has already hurt the US economy, with growth reduced by the failure to agree a budget earlier this year, which led to across-the-board government spending cuts rather than targeted reductions. On top of that comes the damage from the partial shutdown of the US government. But what's really troubling the financial world is the deadlock possibly blocking the raising of the debt limit, how much the US can borrow. Anxiously watching all this are those particularly in Asia that have lent money to Washington. China's government holds close to €1 trillion worth of government bonds. Japan's isn't far behind. The top 5 lenders include lots of offshore money centres and oil-producing states. If the debt limit is not raised, the US won't be able to sell more bonds. And without that new cash coming in, it risks defaulting on paying back the money it already owes. That would trigger a global financial catastrophe. The head of the International Monetary Fund, Christine Lagarde, says it is mission critical that this be resolved as soon as possible.
The ongoing political uncertainty over the budget, over the debt ceiling, does not help. The government shutdown is bad enough, but failure to raise the debt ceiling would be far worse and could very seriously damage not only the US economy, but also the entire global economy.
President Obama says a debt default would throw the world's largest economy back into a recession, which the US Treasury says would be worse than what followed the 2007 crisis. And Obama, using rather more direct phrases than the IMF chief, said, "If we screw up, everybody gets screwed up."